I was reading through your very extensive notes on the banks as well, and there's a lot of other notes out there as well, including from Citi as well, just saying that they are still underweight the financials in the US because they have grave concerns about profitability going forward in an era where we've already talked about the stimulus being provided by the central banks, which of course squeeze that legendary acronym, the NIMS as well. Plus, there's going to be a lot of concerns about loan losses going forward, which US banks have already noted very extensively in the second quarter. Citi want to stay underweight the financials, but do you think there's an opportunity?
I do, and I think you have to look at the market in the banks. Or really, there's three markets. There's the large money center banks, the regional banks, and then the small community banks. I think what Citi's note addresses is the large banks, the money center banks, and more the regional banks. We would say that the small community banks are actually still very interesting. And we've just come off of 2 weeks, the first 2 weeks of earnings. And what you're seeing is that there is news coming out and expressions in the statements of earnings that, yes, there's obviously NIM compression, but the small banks offer the opportunity for consolidation, M&A. And we think whether Biden wins or whether Trump wins re-election, the small banks, there's bipartisan support for consolidation in the small banks. In addition, the small banks are showing that actually under the CARES Act, you could push back your loans. Borrowers could have a 6-month deferral on loans. Most banks did 90 days, and then they were going to grant another 90 days. And what we're seeing is 50 to 90% of those deferrals that for the first 90 days are not being renewed. And that's a very strong point. And also, you need to appreciate that the banks in the United States are the transmission mechanism by which the Fed and Treasury are injecting capital into the market for small businesses and for individuals. And that's something that really 10 trillion's been put to work so far. And as I said at the outset of this interview, another trillion to $1.5 trillion is going to be put into the system. So that brings the fiscal deficit to almost 30%. Those are 1943 levels. Yet, and the last point I would make is that the banks came into the COVID crisis with the highest capital levels they had in 70 years, almost 10% of tangible common equity coming into COVID. So the banks, they just had the DFAST testing, which is the Dodd-Frank stress testing. The largest 33 banks, they all passed, and they passed with some measure of comfort.